You need to understand this tax hack because it can save you a lot of money in tax. We purchased our property for £786,000. There were £155,000 worth of capital allowances. 20% of our purchase price is a capital allowance, which allows us to offset the amount of £155,000 against our tax bill. There are a lot of caveats with this, and this is why you absolutely need a specialist to come on board. And we would recommend using a company called buying a commercial property. If you are buying a commercial property, which we've spoken about a lot in terms of converting to resi and PD permitted development, class MA, class G, all that sort of stuff, you also need to understand this tax hack because it can save you a lot of money in tax. And you've probably heard the word bounded around, capital allowances, and that's what I'm going to be going through right now. But before we jump into it, I am not a tax accountant. This is purely some examples and some of the processes that we've been through on some of our assets. So I'm just sharing that with you guys. This is certainly not tax advice. Capital allowances, what are they? Effectively, it is a offsetting ability with tax to offset certain mechanical, electrical and plumbing items within a property. That's the crux of it. This is a live example from a property that we bought 5 or 6 years ago. And you can see there's a sort of breakdown of qualifying expenditure or qualifying allowances within the building, from cold water installations, heating, ventilation, general power, lighting, gas, power to mechanical equipment. There's things like fire signage, emergency lighting, even thumb terms on certain locks can be claimed as a capital allowance. And then there's a apportionment of cost associated with that qualifying machinery. What that means effectively is, on this example, we purchased our property for £786,000. There were £155,000 worth of capital allowances. So almost 20% of our purchase price is a capital allowance, which allows us to offset the amount of £155,000 against our tax bill. Basically, if the tax rate is 20%, 20% of that £155,000 is your saving. So effectively, we have a saving of 30 odd grand in tax by claiming these capital allowances. There are a lot of caveats with this, and this is why you absolutely need a specialist to come on board. And we would recommend using a company called RCK Partners. We have a great relationship with them, and we can also recommend and introduce anyone that's interested. If you email info@xbproperty or DM us on Instagram, or wherever you find us, drop us a message and we can make an introduction to you for RCK. They've also dealt with other stuff within our businesses like research and development tax claims as well, for things like Aura and XP surveys. So if you want some R&D input or some capital allowance specialist advice, then reach out and we can introduce you to RCK. But ultimately, this is massive. It's only really relevant, and this is how we generally use it. If we are building a property to sell, then typically the capital allowances aren't worthwhile for you. But if you are retaining the asset, that tax relief, so as soon as you start making profitability within that business, within that SPV, within that development that you've just developed, and you're renting out, as soon as you start making profit, you can offset the tax associated with making that profit margin with this capital allowance. So you might make £155,000 in the first year, for example. You might pay tax on that at 30 grand, but ultimately having this capital allowance available to you means that that tax liability will be reduced to nothing effectively. So fantastic tool, great tax hack for you to use within your commercial property purchases, but it is a very, very specialist section of tax, and I might have completely destroyed what it is in my explanation, but from a layman perspective and what we've done in the past, kind of that's how we see it. It's effectively a tax allowance, tax relief, and I've explained kind of the process that they go through. They'll visit the site, they'll write a report saying these are all of the allowances that we found on site through all of the MEP allowances and the equipment, plant and machinery allowances, and then they'll run a calculation to understand what that capital allowance will be at the end of the process. And then you give that to your accountant, and when your year-end accounts are up, they'll take that into account and offset the tax liabilities accordingly. So hopefully that's interesting and useful for people. It saved us a significant amount of money. The report itself, I think we pay something like either 4% of the saving on this. I think we probably would have paid like 5 or 6 grand, so like 4% of this, but obviously everyone's going to charge different things. So yeah, if you want an intro to RCK, who are specialists in this field, then get in touch.
If you got value from this video, make sure you click the subscribe button down below and ring the notification bell, because we release one video at least every week, so you'll be the first to get notified. See you on the next one.